G'day, we're going to have a look today at a training exercise that I call the end on end of the halfway back trading method. Now we're just going to be looking at one time frame. We're going to be looking at the gold contract, the /GC futures contract on a daily time frame, and we're going to be looking at the halfway backs just in the daily time frame. Now it's not a complete picture, but it will help us identify the progression of the halfway back trading method. Now we're just going to zoom in here just from the low to the current price, and we're going to start here. We do our first click at the low. Now we move our cursor up and we just go up candlestick at a time. Now you'll notice here that when we get to the high and we click, we need to keep then following the candlesticks as the price moves down, because this is the retracement phase. And we look here and we see, yes, we have retraced to the 50%. The buyers step in on this long halfway back, and the price moves up towards the negative 23% target, but it doesn't hit there at this point. It pulls back again, but it doesn't fail the trend. It retests the 50%, and at this point here we see that it moves up to complete what we call the measured move, from lows to highs to negative 23% target. Now at this point we want to see if there's going to be a series of measured moves, and for that to happen we draw from this new low, which was the 50% retracement area of the previous trend, and we move up here to the high, and we see that the price retraces back and touches exactly on the 50% to see buyers step in and move up. Now that previous 23% there was the previous trend. We've now gotten rid of that, and the price is moving up, and what do you know, it's right on the negative 23% and pulls back. So at this point we have a second measured move, so we are in a series of measured moves. We go to the new low, which was the 50% area. We click, press up to the new high, which happens to be the negative 23. We get rid of that old halfway back, so we've gone up to the high, and then the very next candle it actually retraces to the 50% area, and the buyers step in again, and we do it again. So we've had three measured moves. We're in a series of measured moves. Go back to the low, up to the new high, get rid of the previous one just to avoid confusion. And what happens? We go from lows to highs. The very next candle, 50% retracement. Very next candle, negative 23% hit. Now at this point it pulls back, but we're going to see if it does a new measured move. That's the 50%. That's the new high. At this point here we have what we call a 618 line break. Now as soon as that happens, we know that this negative 23% target is void, so we get rid of that. And what the programs will do and what we will do is we will flip. We will take this as a high and we will draw the short trend, and we will go all the way from highs to the new lows. then we watch the price retrace, but it's retracing up this time because it's a short trend. Now it's very interesting, isn't it, that those prices there, those three prices, there were obviously sellers there wanting to see if this was going to hit this negative 23% target. They were looking at that as a potential setup. But at this point here, we have a trend break of the short. The 618 line is broken, and therefore we get rid of that, and we move down to the low, up to the new high. And what do we see after that high? Retracement back to the 50% area, and within one bar we've hit the target. So we test if we're going to move into another series of measured moves. Now at this point here we have some rubbish data where we obviously have a break. We could zoom in a little bit closer, but then the trend follows through. It doesn't hit its target, but this is what we call messy data or haziness. Now it doesn't happen too much in the /GC, neither does it happen much in the /ES. It happens too regularly to trade the halfway back on a lot of stocks, but this is sort of frustrating data here because it's ended up continuing in the trend of the direction that this is saying it's broken. But perhaps you could say that maybe this is early signs, early clues that it's not going to get through to its negative 23. It didn't actually hit there, so it was a failed trend. Now you draw from here, you have another break, so that's, you go from the lows to the highs, you have another break. That's what we call flip-flops. We go down to the low, and we actually have a very small retracement and negative 23% hit there. So because of that, we draw from the highs to the lows. We retrace back, and at that point there we have a retracement, so the short trend continues. We don't get to the negative 23% target, and we do get to the negative 23% target. So we go from the 50, draw down to the lows, get rid of the previous halfway back. We go down to the lows, it retraces to that 50% sell area on the halfway back short. It's there again, but on this bar it breaks. So we flip. And we go from the long trend, which is the low, to the high. Now at this point here, we keep going to highs, but we are in a really strong move on the gold market. Now we keep going to highs, and note that nothing is retracing back. Nothing is retracing back. So it moves into, at that point there, something that we call extensions. And that really is the topic for another day. But you look at this point here, this low, moving into this high, you have a retracement, and then a move to the negative 23% target. Hopefully that was helpful. Appreciate your questions and comments on how we can teach this more effectively. You can get me at sydneyoptionstrader@gmail.com. Bye.